What's up, everybody? It is Tuesday, September 22nd. What's going on? How's everybody? So, we had a nice bounce today in the market. The question is the correction over? Is this bounce something that is going to have some legs? Now, I will tell you that I did see some improvement in those corporation income tax flows today in today's daily treasury statement. Now that's one day, so that doesn't necessarily make a trend, but that bears watching. Like if I start to see that improve, this thing's going back up. And the reason why I say that, there is still an unprecedented amount of fiscal support out there. Fiscal stimulus is at record levels, almost 6.8 trillion in total spending. We're above 1.8 trillion now year over year. Those are historic numbers. So, I get back to what I have been saying. What I think was happening here is that people are basically sitting on their money right now. You see it in bank deposits piling up to record high levels. And, we've had the fires out west. We had the hurricanes down in the Gulf. We still got COVID going on. We got election anxiety, and that might persist, of course, until the election and maybe even afterward. We got the Ruth Bader Ginsburg situation with Trump now going to nominate somebody. So you have all these concerns and all these actualities which maybe are keeping people from going back to work or businesses from opening up. And I saw that in the corporation income tax flows, but looks like today we got a little hint that maybe this thing is turning. And if it is turning, market's going way back up to new highs because, like I said, there's a lot of fiscal support. Speaking of hurricanes, just as on a side note, man, it's been an active season already, but there are two more. There's one hurricane all the way up off the Massachusetts coast, off the northeast coast at 39 north latitude. You hardly ever see hurricanes up there unless they come from the south and then veer up. That's pretty north, and usually the ocean temperature at that latitude, it's just not warm enough to generate the energy for a hurricane. And then you have another one, I think, around 30 or 35 north latitude in the eastern Atlantic. So really it's been unbelievable. And of course the fires out west. So yeah, I'm going to be keeping an eye on that, on the corporation income tax flows. The market has had a decent correction. There's plenty of fiscal stimulus out there, as I said. We can easily run back up and make new highs. And remember, the Dow Jones average didn't make a new all-time high. The others did. The S&P did. The NASDAQ definitely did. But I was expecting the Dow to go to 30,000, and then we had that pullback, which basically I said, hey, we are going down because I saw those corporation tax flows start to weaken up. We had Powell jibber-jabbering today. The dollar has taken a breather, from its downtrend. That's going to happen. I've explained many times that, you basically have two opposing forces here. You have the fiscal situation and the trade deficit acting negatively, and those are long term. That fiscal situation, the fiscal deficit is not going to go away anytime soon. The amount of fiscal expansion and deficit spending, that's probably going to stay at this level, if not get even higher, even with a new administration, if that happens. And the trade deficit, same thing, man. The world runs surpluses with the United States. That's how they acquire dollars. Those are negative factors, and those negative factors have been in place for a very, very long time, for decades. And that's a slow drift down. That's not like a crash or anything like that. On the bullish side for the dollar, you have Fed monetary policy. They're going to keep interest rates down at zero now up until 2023. You still have asset purchases going on. These things are deflationary. So, I mean, you have these two forces. So basically the dollar is in a long-term downtrend. You're going to have these corrective moves like we had from 2018 to 2020, and then we came all the way down to the 91 handle on the dollar index, back up here to 90, 94. It'll go back down again. You sell these rallies. I've been selling these rallies. Gold, I'm a buyer down here. I don't have 100% evidence that producers are back in on the buy side. I've been saying, for the last few weeks, they've been on the sell side, which we haven't seen for a while. And that was a signal for a pullback. But it wasn't aggressive selling. All right, they're selling, not aggressively. I have a feeling we're going to see them when we see Friday's numbers in the CFTC commitment of traders. I think we're going to see them as buyers down here. I'm pretty sure we're going to see them as buyers down here at the 1900 or just below the 1900 level. API oil statistics came out a short time ago. Big draw in gasoline. Actually, gasoline now is gasoline inventories are down 2.8% year over year. That's the first time we are negative year over year in 10 months. So the entire surplus of gasoline that we have seen has been eliminated. I think that's bullish. Tomorrow we'll get the EIA report. So anyway, I sent out a bunch of emails today to my subscribers with more detail about those tax flows and everything else. If you want to get a copy of that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial at MMT Trader. If not, I'll see everybody tomorrow. Take care. Bye-bye.